The ticker on your screen is flashing green. It is moving so fast the numbers are blurring. But I am here to tell you that this is the most dangerous moment of your financial life. Right now, in this hypothetical future, where silver has gone vertical, the psychology of the market has shifted from fear to pure, unadulterated mania. Your phone is blowing up. Friends who haven't spoken to you in 10 years are texting you, asking how to buy silver. The Uber driver is talking about mining stocks. The news anchors who called you a conspiracy theorist are now running 24-hour specials on the silver supercycle. They are interviewing experts who are predicting $5,000 silver by next Tuesday. The narrative has flipped completely. The herd has arrived, and when the herd arrives, the smart money leaves. This is the hardest thing you will ever do. It is easy to buy when the price is low and everyone hates you. It requires conviction, but it is infinitely harder to sell when the price is high and everyone loves you. It requires courage. It requires you to fight your own biology. Your brain is screaming at you to hold. Your greed is telling you that this is just the beginning. You start doing the math in your head. If it goes to $2,000, I'll be a billionaire. If I hold just one more week, I can buy a private island. This internal monologue is the siren song of the bag holder. You have to understand the mechanics of a mania phase. A parabolic move where the price goes from $100 to $1,000 in a short period is not sustainable. It is a chimney fire. It burns hot, it burns bright, and then it collapses under its own weight. The structure of the market becomes incredibly fragile at these levels. There is no support below. If the price drops, it doesn't drop to $900. It air pockets down to $600. We are looking at a scenario where the short squeeze has completed. The banks have covered or gone bankrupt. The industrial users have panic hoarded everything they can find. The buying pressure now is purely speculative. It is the greater fool theory in action. People are buying only because they think they can sell it to someone else for more tomorrow. This is a game of musical chairs, and the music is playing at a deafening volume. But the music will stop. You must decouple your emotions from the number on the screen. That number is not wealth. It is potential energy. It is unrealized gain. Until you sell, you have made nothing. In fact, you are in a more precarious position than when you started. You are now the custodian of a massive bubble. You are walking around with a winning lottery ticket in a bad neighborhood. If you do not cash it, it is worthless. The history of financial markets is littered with people who rode the elevator up and the elevator down. Look at the dot-com boom. Look at the Bitcoin peak of 2017. Look at the Hunt brothers in 1980. They had it all. They had the market cornered. But they didn't have an exit strategy. They got greedy. They thought they could dictate the price forever. And they ended up bankrupt. Do not be the Hunt brothers. Be the silent assassin who takes the profit and disappears into the shadows. The media will try to trap you. They will invent new paradigms. They will say, silver is the new global currency. They will say, there's a permanent shortage. While these things might be fundamentally true in the long run, in the short term, price always overshoots reality. At a $1,000, silver is pricing in the collapse of Western civilization. If civilization does not collapse completely by Friday, the price will correct. You need to recognize the signs of the top. The first sign is widespread public participation. When your grandmother asks if she should put her pension into silver, the top is near. The second sign is the malfunction of the exchanges. When the apps crash because of too much traffic, when Coinbase goes down, when the bullion dealer websites time out, that is a signal. It means the infrastructure cannot handle the volume. It is a sign of peak load. The third sign is the disappearance of sellers. In a healthy market, there are buyers and sellers. At the top of a mania, there are only buyers. This creates a vacuum. The price levitates because nobody is selling. But the moment one large whale decides to cash out, the vacuum fills with panic. The liquidity evaporates instantly. You want to be selling into the buy-only market. You want to be feeding the ducks while they are quacking. We also need to discuss the wealth effect. At $1,000 silver, you feel rich. You might start spending money you haven't realized yet. You might book a vacation. You might look at expensive cars. This is dangerous. It makes you emotionally attached to the high price. If the price drops to $800, you feel like you lost money. You must treat your exit with the same military discipline as your entry. You are not betraying the movement by selling. You're not a traitor to the silver squeeze. You are a rational actor securing your family's future. The movement was about breaking the manipulation and finding true price discovery. At $1,000, price discovery has happened. The mission is accomplished. Now is the time for harvest. Consider the macro environment during this mania. If silver is $1,000, the world is likely in chaos. Inflation is likely running at 50% or 100%. The dollar is likely being rejected globally. In this environment, your silver is your life raft. But a life raft is not a destination. It is a vehicle to get you to the other side. You don't live on the raft forever. You paddle to land. Selling silver is stepping onto land. The land we are looking for is productive assets. We are looking for cash flow. We are looking for things that feed people, house people, and power the world. Silver sits in a vault. It does not pay rent. It does not grow corn. At $1,000 an ounce, the opportunity cost of holding silver becomes massive. You could trade one monster box for a working farm. You could trade a tube of coins for a rental property. That is the trade of a lifetime. That is how you turn a speculation into a dynasty. But before we get to where you put the money, we have to talk about how to get the money out. Selling at these levels is not like selling at $20. The logistics are a nightmare. The dealer liquidity is dry, the banking system is hostile, the tax man is watching. In the next section, we are going to break down the mechanics of the exit. How do you physically liquidate millions of dollars of metal without triggering a freeze? How do you navigate the dealer limits? And how do you avoid the trap of selling for a digital currency that is about to die? Prepare yourself. The ascent was the fun part. The descent is where the survivors are separated from the victims. You have climbed Everest. Now you have to get back down without running out of oxygen. The air is thin up here. The view is beautiful, but the cold is deadly. Let's talk about how to get down alive. You have made the decision to sell. You have conquered your greed. Now you face a new enemy, the plumbing of the financial system. You assume that because the screen says silver is $1,000, you can simply snap your fingers and have millions of dollars in your bank account. This is a fatal assumption. In a liquidity crisis, which is exactly what a mania is, the mechanisms of exchange break down. Let's look at the physical market first. You walk into your local coin shop with a bag of 500 ounces. You expect to walk out with $500,000 in cash, but the dealer looks at you with a pale face. In a banking crisis, a check is merely a promise from an insolvent institution. If you hand over your hard asset for a paper promise that takes 3 days to clear, you are taking on massive counterparty risk. What if the bank declares a holiday before the check clears? What if the dealer's bank account is frozen due to suspicious activity? You have just traded your freedom for a lawsuit. So, strategy number 1, you do not sell everything at once. You must scale out. You sell in tranches. You sell 10% of your stack on Monday. You wait for the funds to clear and become available. Then you sell another 10%. This mitigates the risk of a total freeze. It also averages your exit price. You won't hit the exact top, but you won't sell everything at the bottom of a dip either. You also need to look at the bid-ask spread. In a mania, the spread widens to the size of the Grand Canyon. Spot might be $1,000, but dealers might only be bidding $900 because they are afraid of the volatility. Or conversely, spot is $1,000, but dealers are paying $200 because they're desperate for inventory to fill orders. You need to shop around. Do not be loyal to one dealer. Call the big online wholesalers. Call the local shops. Look at the peer-to-peer markets. But the peer-to-peer market carries physical danger. Now, let's talk about the digital exit. If you hold PSLV, mining stocks, or futures contracts, your exit is a mouse click. But the risk here is the brokerage. If everyone tries to sell at once, the brokerage might halt trading. We saw this with GameStop. They turned off the buy button. In a crash, they might turn off the sell button, or the systems might just glitch. You need to have multiple accounts. If you have all your mining stocks in one app, you're exposed to a single point of failure. Spread your risk across different brokers, preferably in different jurisdictions. Have a plan for phone orders if the website is down. Have the direct number to the trade desk written on a piece of paper. And then there is the banking problem. Let's say you successfully sell $1 million worth of mining stocks. The cash hits your brokerage account. You wire it to your checking account, freeze. Your bank's algorithm flags a massive incoming wire as suspicious. They lock your account pending an investigation. You call customer service, and you're on hold for 6 hours. Meanwhile, the dollar is crashing, and your wealth is stuck in digital purgatory. To avoid this, you need to warm up your bankers. Go to the branch before the mania peaks. Talk to the manager. Tell them, I am an investor. I expect to be liquidating some positions soon. I will be receiving large wires. What documentation do you need so this doesn't get flagged? Pre-clear the runway. Having a relationship with a human banker is better than fighting an algorithm. Better yet, do not go to cash at all. Look for asset swaps. This is the ultimate exit strategy. Find a seller of real estate who understands the situation. Offer to pay in bullion. If you can trade silver directly for land, you bypass the banking system entirely. You bypass the settlement risk. You bypass the immediate tax reporting triggers, though you still owe the tax. The transaction is private in the moment. This is how the wealthy have traded for centuries. Land for gold, gold for land. Cut out the middleman currency. We must also discuss the tax trap. The government is watching. If you make $1 million in profit, they want their cut. Capital gains taxes will apply. But in a currency crisis, they might implement windfall profits taxes. They might say, speculators who profited from the collapse of the dollar must pay an 80% tax. This is theft, but it is legal theft. To mitigate this, you need to look at tax advantage structures now before you sell. Charitable remainder trusts, opportunity zones, 1031 exchanges, if applicable to the asset class you move into. You need a tax lawyer on speed dial. Do not use TurboTax for a $10 million exit. You need a professional who knows how to structure the exit to legally minimize the blast radius of the IRS. Consider the currency you are selling into. If you sell silver for US dollars, and the US dollar is hyperinflating, you have gained nothing. You need to move from the sale to the next asset immediately. The velocity of money is critical. You cannot let the cash sit in your account for a month waiting for the right deal. In a hyperinflation, your cash loses 1% of its value every day. You must have your buy list ready before you sell. You need to know exactly which farm you want, exactly which dividend stocks you want. The moment the funds clear, you execute the buy order. You treat the dollar like a hot potato. It is radioactive. You hold it for the minimum amount of time necessary to facilitate the transaction. Beware of the limit down trap. If the mania breaks, the price will crash faster than it went up. The exchange limits price movements. If silver falls $50 in a day, they might halt trading. The next day, it opens $50 lower, and they halt it again. You might be trapped in a position you literally cannot sell because the market is locked limit down for a week. This is why you sell into strength. You sell when the market is rising. You sell when the buyers are begging for it. If you wait for the peak to pass, you will be selling into a falling knife, and the exchange rules will work against you. The mechanics of the exit are boring. They are bureaucratic. They involve forms, wires, phone calls, and stress. But they are the difference between being rich on paper and being rich in reality. The amateur celebrates the high price. The professional celebrates the settled wire. In the next section, we will discuss where to put the proceeds. You have escaped the burning building of the silver market with your wealth intact. Now, where do you build your fortress? We will talk about farmland, energy infrastructure, and the specific types of stocks that survive a currency reset. We are moving from the offensive phase to the defensive phase. You have successfully liquidated. The silver is gone. The mining stocks are sold. You're sitting on a pile of cash or a bank balance that makes you dizzy. But the anxiety is not gone. In fact, it is higher. You're now holding the very thing you bet against, fiat currency. And the fiat currency is dying. The inflation rate is soaring. The government is printing trillions to bail out the system, and every second you hold dollars, your purchasing power is evaporating. You must rotate. You must pivot. This is the great rotation. You're moving your wealth from a speculative store of value, silver, into productive, cash-flowing assets. You are moving from insurance to empire. The first and most important asset class to target is farmland. As Mark Twain said, buy land, they're not making it anymore. But not just any land. You want productive, arable farmland with water rights. In a world of currency collapse and supply chain breakdown, food is the ultimate currency. If you own the land that grows the corn, the soy, or the cattle, you have a business that cannot go to zero. Farmland is an inflation hedge that pays you a dividend, the crop yield. At $1,000 silver, the ratio of silver to an acre of farmland will be at historic lows. You might be able to buy a prime acre of Iowa farmland for 10 or 15 ounces of silver. This is a steal. You are trading a shiny rock for the source of life. Even if you don't farm it yourself, you can lease it to corporate farmers. The rent checks will rise with inflation. If the price of corn doubles, your rent doubles. You are protected. The second asset class is energy infrastructure, pipelines, refineries, hydroelectric dams. These are the arteries of the global economy. No matter what the currency is worth, people need to heat their homes. They need to drive their cars. They need electricity. You want to own the companies that own the pipes. Look for master limited partnerships, MLPs, or blue chip energy stocks that have tangible assets. Avoid tech stocks that trade on future earnings or intellectual property. In a reset, a new app is worthless. A pipeline moving natural gas is priceless. You want boring, you want dirty, you want essential. You want companies that have survived World War II, the 1970s inflation, and 2008. Companies like Exxon, Chevron, or the major utilities. When the dust settles, these companies will still be there, and they will be charging for their services in whatever new currency emerges. Let's talk about the Dow to silver ratio. Historically, this ratio helps us time the rotation. When the Dow Jones Industrial Average is priced in ounces of silver, we see peaks and valleys. At the peak of the stock market bubble, it might take 1,000 ounces to buy the Dow. At the bottom of a hard asset cycle, like 1980, it took 1 ounce of gold, or roughly 20 ounces of silver, to buy the Dow. If silver hits $1,000 and the stock market crashes, the ratio might hit 1.1 or 5.1. This is your signal. This is the moment you sell your silver and buy the entire index. You're buying the productive capacity of the American economy for pennies on the dollar. You're buying General Electric, Coca-Cola, and 3M when they are on the clearance rack. This is how the Rockefeller family maintained wealth. They bought the bottom of the crash. You're using the silver mania to fund your entry into the industrial elite. Residential real estate is tricky. In a crash, people stop paying rent. Eviction moratoriums might be enacted. The government might freeze rents. So be careful with residential rentals in blue cities with strong tenant protections. Instead, look at commercial warehousing or industrial real estate. Look for the warehouses that store the goods. Look for data centers. Or look for multifamily in jurisdictions that respect property rights. But the goal is cash flow. Silver does not have a yield. Farmland has a yield. Stocks have dividends. Real estate has rent. When you make the rotation, you are securing an income stream for your children and grandchildren. You are setting up a perpetual motion money machine. Even if the value of the land drops in nominal terms next year, the corn still grows. The rent checks still clear. Consider the psychology of the new rich. You will be tempted to buy toys, a Lamborghini, a yacht, a massive mansion. Resist this. These are liabilities. They require maintenance, insurance, and taxes. They draw attention to you. In a time of economic hardship, driving a Lamborghini is painting a target on your back. It screams, "I have money," to desperate people in a desperate government. Practice stealth wealth. Buy a modest, defensible home on a good piece of land. Drive a reliable truck, wear normal clothes. Reinvest your windfall into assets that are invisible to the naked eye but heavy on the balance sheet. The goal is not to look rich. The goal is to be sovereign. Diversify internationally. Do not put all your farmland in one county. Do not put all your stocks in one country. If the US implements capital controls, you want to have assets in South America, in Asia, in Europe. You want a Plan B passport? You can use your silver profits to buy citizenship by investment in places that offer it. This is the ultimate insurance policy. If the walls close in at home, you have a key to a door somewhere else. You must also keep a doomsday stack. Do not sell 100% of your silver. Keep 10% or 20%. This is your chaos insurance. If the rotation fails, if the stock market goes to zero, if the farmland is seized, you still have the physical metal buried in the ground. This stack is never for sale. It is the foundation that allows you to take risks with the other 80%. It allows you to sleep at night. The Great Rotation is about legacy. It is about taking a moment of extreme luck and preparation, the silver squeeze, and freezing it in time. You're locking in the purchasing power. If you stay in silver too long, the bubble bursts, and you are back where you started. If you stay in cash, inflation eats you. By moving to productive assets, you escape the trap. You become part of the land, part of the economy, part of the infrastructure. In the final section, we will discuss the end game. The government will not take this lying down. We will discuss the threat of a currency reset, the Central Bank Digital Currency, CBDC, and how to protect your newly acquired assets from the final grab by the state. The exit is not just about selling. It is about surviving the new world order that follows the crash. We have reached the end game. The shadow banks are liquidating. The stock market is in free fall. The pension funds are insolvent. The average American is watching their 401k vaporize. The streets are filled with panic. The phone rings at the White House. The phone rings at the Federal Reserve. It is the plunge protection team. The Federal Reserve is now facing the ultimate nightmare, a paradox that economic textbooks say shouldn't exist. They are facing a crashing stock market, deflationary signal, and a skyrocketing commodity market, inflationary signal at the same time. Normally, if stocks crash, the Fed cuts interest rates and prints money, QE, to save them. This is the Fed put. It has worked for 40 years. But this time, the trigger for the crash is inflation in the commodity sector. The trigger is silver. If the Fed prints $1 trillion to bail out the hedge funds and save the S&P 500, that new money will flow instantly into the hottest asset on the planet, silver. If they print money, silver doesn't just go to $100. It goes to $200, $300, $500. It goes hyper vertical. This causes the price of everything else, gas, food, electronics, to explode. It triggers hyperinflation. So the Fed has a choice. Option A, save the stock market and the bond market, but destroy the dollar and cause hyperinflation. Option B, save the dollar and fight inflation, but let the stock market and the banking system collapse completely. History tells us they will choose option A. They always choose to save the system they control. They will sacrifice the currency to save the banks. This leads to the pivot. You will see the Fed chairman walk out to the podium. He will look shaken. He will announce emergency measures to stabilize market function. He will announce that the Fed is opening a liquidity facility to buy corporate bonds and stocks. He will announce yield curve control, the YCC. YCC means the Fed will print infinite money to buy treasury bonds to keep the rates low. They cannot afford for rates to rise, or the government goes bankrupt. The moment this announcement is made, the dynamic changes. The liquidity crash ends, and the crack-up boom begins. A crack-up boom is what happened in Weimar Germany or Zimbabwe. The stock market rises. It might even go to new all-time highs. But it is rising in nominal terms only. The numbers go up, but the value goes down. If the Dow Jones goes to 50,000, but a loaf of bread costs $50, are you richer? No. This is the transition you must prepare for. The invisible crash we described in parts 1 to 3 is a deflationary shock. It is the sound of money being destroyed by margin calls. It might last a week, a month, or 3 months. It is the period where cash is king. But the reaction to that crash, the Fed printing press, triggers the inflationary tsunami. This is the period where cash is trash. Your strategy must be nimble. Phase 1, the liquidity crunch. Right now, immediate future. You want to be out of leveraged tech stocks. You want to be out of corporate bonds. You want to hold cash for the dip and physical gold, dollar, silver, which has no counterparty risk. During the crash, silver might be volatile. It might dip initially as people sell it to raise cash, as we discussed, but it will rebound faster than anything else. Phase 2, the Fed pivot. The moment they announce bailouts. You sell your cash, you buy hard assets with both hands, you buy the miners, you buy energy, you buy the things that survive inflation. Do not be fooled by the nominal recovery of the stock market. When the S&P 500 bounces back, the media will say, the crisis is over. It is a lie. The crisis has just mutated. The stocks are rising because the dollar is dying. This is why the invisible crash is so dangerous. It destroys the middle class in 2 steps. First, it scares them out of their positions at the bottom during the liquidation. They sell their 401k at a 40% loss because they are terrified. Then, when the Fed prints the money, the market rips higher, leaving them behind, holding worthless cash that is being inflated away. They get sold out at the bottom and inflated out at the top. It is total wealth destruction. But for the shadow banks, the ones that survive, they get bailed out. The Fed buys their toxic assets. They get to keep their bonuses. The transfer of wealth goes from the saver to the speculator, unless you own silver. Silver is the one asset that stands outside this corrupt loop. It is the one asset that the Fed cannot print. It is the one asset that benefits from both the fear, crash, and the solution, inflation. When the hedge funds are liquidating, silver is the cause. When the Fed is printing, silver is the beneficiary. It is the sword and the shield. So when you see the headlines screaming market turmoil, hedge fund blow up, emergency Fed meeting, do not panic. Smile. This is the sound of the system resetting. This is the sound of the leverage unwinding. The invisible crash is necessary. It is the forest fire that clears the dead wood. It is painful, yes, but it clears the way for real price discovery. Your 401k might take a hit. Your paper wealth might fluctuate. But if you hold the metal, if you hold the physical reality, you will come out the other side stronger. You are not dependent on the shadow banks. You're not dependent on the algorithm. You are your own central bank. The crash is coming. The liquidation is imminent. The SPY is the target, and silver is the bullet. Prepare accordingly. The show is about to start.